Good afternoon on this warm February 7th on Tuesday. This is Brian Dallum for a market update. I want to get started with the latest news in the world. I'm sure we've all seen the headlines of the Chinese either weather or spy blimp, depending on which country you ask. I'm making light of it a little bit, but the reality is it appears that the tensions between, the two world economic and military superpowers with China and the United States continue to be on edge. Earlier this week, Anthony Blinken was supposed to go to China for some, I guess you would call it, talks to address some of the things moving forward with the tensions between the United States and China. And on the exact same day is when we had the news of the supposed spy blimp or balloon in the U.S., which we later shot down. So that certainly didn't help any relationships between the two countries. But the reality is, with China being our number one customer in terms of agricultural exports, it's something we have to pay attention to on a daily basis, it appears, as the news continues to unravel here. So we just want to keep an eye on this and see how things play out. I think both countries understand the tensions and implications therein, but certainly something that the markets will definitely not ignore. Let's move on to the harvest in South America. In the United States, the harvest moves from the south to the north in our normal time frame and calendar, but in South America, it moves from the north to the south, being on the southern hemisphere. So right now, northern Brazil is harvesting soybeans. They're about 9% complete, which is a little behind pace, but nothing that I think the market is overly worried about at this point. What we are keeping an eye on for sure is their weather. There's twofold in implications right now for weather in Brazil specifically. One, their crop is done, it's just getting it out. Their infrastructure, as we've all heard over the years, is not fantastic in terms of roads and transportation. So any hiccups with extra rains would hinder their harvest a bit. And at the same time they're harvesting their soybean crop, they turn right around and plant a short season corn that we call the safrinha corn. So we also watch the weather in terms of, will they get that safrinha crop planted in a timely manner, and will it have good enough moisture to get the crop up and going? So really, the weather at this stage of the game in February is twofold. It's one, can they get their soybean crop, which appears to be a massive one. A lot of estimates put them over 150 million metric tons, which would be a record. So can they get that crop out? And two, will they be able to then turn around and plant a short season corn crop? And we'll have to see how that will affect the futures market here in the U.S. as well. If we look at energies, so if you go back to earlier this year, you can see on the chart on the left there, the natural gas chart, natural gas futures just rocketed to multi-decade highs. A lot of that obviously having to do with fears of ongoing issues with the Ukrainian-Russian war and the supply line of natural gas coming into Europe. Now, if you look toward the opposite side, down and to the right on that, you can see the natural gas market has just been gutted here over the last month or so. A lot of that being that in Europe, in the United States, anywhere in the world, because natural gas is a world commodity, it's been warmer. It's been an unusually warm winter so far, as we can attest to here in Northern Illinois. We did have two cold snaps, but at face value, it's been relatively warm. So the energy usage in the time where typically we have a huge draw for heat hasn't been great. So natural gas has really fallen off a cliff here. And you may remember quite a while back, I talked about an interesting thing with natural gas is it is used in just of a lot of the fertilizers we use. So as natural gas being a component to produce fertilizer rallied high, we saw the costs of our fertilizers for our fields go rocketing higher and higher. It'll be interesting to see this spring if we see that drop off a little bit. I'm hearing the futures market and things like that of wholesale fertilizer has been weakening, but it doesn't appear it's made that all the way to the farm gate yet, as it appears that at this point, your nitrogens and your potash and your DAP and things still continue to be elevated for planting next year's crop. If you look on the right, we always keep an eye on crude oil when we're talking about ag futures and commodities. Crude oil in general has a massive effect on just about every economy or industry in the world. And it's backed off here a little bit, as you can see, since its peak there in last early July of last summer. We've topped out there above $100 a barrel, and it's really dropped off and weakened, got as low as I believe below $70 a barrel. Now we've kind of been marching back and forth here between $73 and about $83 a barrel, and we're firmly right in the middle of that right now. So we'll have to keep an eye on that. As it stands today, your ethanol markets continue to have decent margins, not as good as they had last summer, but they continue to crush at a pretty good pace right now. Let's switch over to the ags. So corn futures. I've got the March 23 corn futures chart here for you. I'm just kind of trying to highlight the range that we've been locked in here since after harvest got over, and really March futures specifically have been locked right in that 640 or just under, up to a little over $7 range. We've kind of bounced back and forth recently, especially after our January 12th report, where corn, you can see, kind of launched higher and made a run at the $7 mark, but we can't quite get past that. And I think there's a psychological barrier there where if we get close to $7, that's going to be a tough step to cross. If we do, then I would look for continued upside movement. But for now, you can see we've really settled in this upper 670 range going forward. And the thing you have to keep in mind on your corn is the market is inverted, meaning that the deferred months in May and July are lower than the nearby corn. So we have to keep that in mind. If you're going to keep corn in the bin completely unpriced, the futures are inverted. And at the end of the day, I'm certainly sure that we've all seen where our interest rates have gone on our operating line. So really the cost of holding grain unpriced in the bin is a little bit more than it used to be over the last couple of years when our interest rates were closer to 2%. The Fed will come out later on today with some more comments on their thoughts with inflation. And I think really the market does not expect them to pump the brakes at all on interest rates increasing. We have seen the CPI index drop a little, but in the last comments, the Fed said they are firmly standing their ground in terms of stopping inflation and bringing it back to the 2% target. So we'll have to keep that in mind. But I guess what I'm saying here is keep in mind the grain in your bin is worth quite a bit, not only cash price, but interest value to you as well. If we look at new crop corn, December 23 futures, you can see I've got two lines here that are kind of drawn, and I guess I'm not pointing to any specific cash level rather than the fact that we have diverging lines, which tells us that corn may be at a point where we can either break out lower or higher, but we need some news to really spur things along here. As we get close to this $6 level, we'll have to see if the corn market is spurred higher. If we could see some demand spike out of the Gulf, our exports have been unbelievably slow as the U.S. corn crop has been overpriced to the rest of the world. So if we could see some new export sales, or if we see some dry weather slow or hinder the planting of the safrinha crop in South America, things like that could spur new crop corn higher. But at the same time, I guess if you haven't done anything yet on new crop corn, as we get closer to the $6 level here, I think that's a great place to get something locked in or get your first 10, 15% of your corn priced. We know our input costs are high, but at those levels, I think we can lock in a profit and really get started on our marketing plan. Let's switch over to soybeans here. This is old crop soybeans. We really feel that there isn't a lot of old crop soybeans left unpriced out there. As you can see here, as we approach the end of the year, right after Christmas and on through mid-January, there's a lot of really good opportunities for $15 cash soybeans. And I think guys did a great job of taking advantage of that and pricing out the rest of their beans that they had in the bins or in storage at the elevator. If you have not priced anything or you still have beans in storage, again, I would encourage you to put your price targets and get offers working, because the carrying cost, just again in interest alone on soybeans, can come up to about 8.5 cents a month. So you would really need a sharp move higher to justify the interest cost alone of holding soybeans off the market. And let's face it, $15 beans on what was a pretty good bean crop, that's great profit margins. So certainly if you have old crop beans unpriced, This is a great time to get something done while we're still around the $15 level, because with Brazil only being about not 7 to 9% harvested, they have a lot of crop to go, and it is a big one. So cheaper South American soybeans will continue to hit the market here over the next 30 days, and that's really going to take any U.S. chances at exporting beans off the books, as we're just well overpriced. If we switch over and look at new crop soybeans here, I've got the November 23 futures up. I do have a line kind of drawn across the top there, and that's just over $14, around $14.07, I believe it is. We've kind of bounced up and off of that a few times. If we go clear back to September, we've had one jump higher there as we were right around the Christmas time, I believe. So what I'm getting at here is $13.60 all the way up to $14, I think is probably going to be a good place to get some sales on here. Again, with South America's crop being huge, they're really going to have a lot of beans that are going to fill the world demand for quite a while with that crop being so big. Now, don't get me wrong, stocks here in the U.S. are super tight. Some people have said possibly below a 200 million bushel carryout, which is extremely tight. However, some of that is offset as we look at the world production as a whole by the fact that Brazil's crop is a monster. So there's a fine line here to walk. And I really think that the biggest risk lies in doing nothing. If we can get some beans priced above $13.50 cash in that range, futures all the way up to, say just under $14, that seems like a great place to take some risk off the table, lock in some profits for next year, and really get started in marketing, because that to me probably is maybe the most urgent of all these charts I've shown you, is this opportunity as soybeans have really rallied off their lows around $13.30. We've had a 45-cent rally up to where we're at today. So probably a great place to get started if you haven't already on your soybean marketing. With that, I'll kind of leave you with a little heads up on tomorrow. The USDA will be releasing their monthly update on their S&D tables. Down below, you can see mainly the numbers that are really going to be looked at closely tomorrow is what our expected ending stocks will be for both corn and soybeans. You can see all the way over to the right, circled in red, in January, they left us with a 1.24 million bushel carryout on the corn, as well as just over 200 million bushel carryout on soybeans. So expectations are that doesn't change a lot. They do have corn slightly higher. Again, a lot of that due to our weak export demand. But those are the numbers we're going to key in on tomorrow, and the market will probably take some direction from. So we'll have to keep our eyes and ears open for the report tomorrow and check for the market reaction then. With that, I'll just say thanks again for checking in with us. And if you have some offers that you want to get in place, it's a great time to get those working in front of the report tomorrow. Thanks again. And this has been Brian with a FS Grain Market Update.